06 time and sunny. Ready for a month of impactful learning from us all together? Let's dive in together, focusing on our trading goals. Thank you for choosing us. Let's make this journey extraordinary. We'll do in 3 sessions today's session. First one, I'll be doing maybe 30-40 minutes, and then I'll request Marty for 20-25 minutes. He had run an exceptional quiz last time. We can ask him to go through it, and Tyron could ultimately join. Good afternoon, Tyron. We have just started. And then from 4 to 5, we'll all listen to Kelly's wonderful presentation, what she will be sharing with us. So that will be a separate recording for that. All right. So what we will do, we will start with the, as usual, answering your questions. And the first set of questions which I have got is from Vijayata. You can also ask questions by unmuting here, unmuting this place. This is the mic. If you can see my screen, this is the mic. So you can unmute and talk, or you can chat here. You can ask a question. Like Vijayata said, Gautam, we'll be missing Gautam today, so you can do that also. So these are the two options, best options, and the other one, not now. You could have taken that options previously, just before the meeting. You could have asked the questions through the support team, support@npfinancials.com.au. So what I'll do, we'll start with Vijayata's question, what she has asked. Vijayata, thank you for your questions. I really appreciate. These are the questions from Vijayata in front of you. Vijayata is saying, would you please clarify, would you please help clarifying the following? First one is daily breakout on gold on the 30th January. And how the second one is how to identify the possible next week short-term trend for the following currency pairs: Euro, Aussie, Yen, Euro, CAD, and Aussie. All right. So we'll do both. All the actually there are 6 questions in it. But I'll start with dollar. Everyone can see my screen, can see Vijayata's question, and can hear my lovely voice, can't you?
Absolutely.
Yes, sir.
Thank you, Ben. All right, so we'll start with the gold setup, daily setup. Yeah, we gave a gold call in our trade idea section. In our trade idea section, which is dedicated to our client members only. We call it client arena or members portal. In that, you also get the trade ideas. In that trade ideas, for the last 7 years, 84 months, we are profitable 73 months, and we had 11 months of losses. But the gold, which I'll be going to show you, and you all know those records of the trade ideas, which is there in our website itself. It says, if you scroll down a little bit, it says 74,000 points, 84 months, 7 years, at an average of 882 points per month, at 99 average pips per trade. So if anyone is taking all our trade ideas whenever it comes, thanks to Telstra, whenever it comes, we'll show you that record of it means 882. It means when you do the plus minus, it will look like this: 84 months of trade ideas, 7 years, from 2016, 11 months of losses. And when we lose 48 points, 302 points per month, or 9 points or 320. But when we win, we can win big, like 9,000, 6,000, 4,000, 1,000. Small wins are also there, 6. So that's the average every month, which is 882 points. So it has come thanks to Telstra. And then 882 points means if anyone has, and all of you, those of you who are members, have taken all our trades for last 7 years, he or she must have got $882 per month, provided he or she has taken $1 $1 a point. That is a mini lot. Whenever we close the trades, whenever we initiate a trade, it goes and hits your email address. And whenever we close a trade, it goes and again hits your email address. And then you can see whatever we have done. In the last trade of Amazon, we lost 28. Come again? Sorry, someone is speaking. So can you please mute? Can you please, if it is Abraham or anyone. Just hold on. Let me unmute whosoever is talking. Please unmute. Please mute yourself when you are talking, unless and until you are asking a question. Otherwise, it will a lot of disturbance here. Thank you for that. So, and if you can see, 0 means either it is break even or not triggered or break even. And in last Amazon, we lost 278 points, and sterling we lost 56. But in Apple, we won 765. And in Facebook, we won 259, and US dollar 50. So if you do this plus minus for last 7 years, you will get that points. So that's what we do. And we gave a call. I was answering. I was showing all these trade ideas and trade outcomes in the context of these questions, because in trading, context is everything. Without context, trading is a tough business. With context, trading can be simple. So the context I was explaining, the trade idea which we shared for the gold on 30th of January, 30th last month. That's what the question is posted here by Vijayta. This 30th January gold long 2029, and we said daily breakout. We said daily breakout. We also write it down why we are entering a trade, like a daily breakout or daily crack and snapback or double bottom or relative divergence, everything. But when we close a trade, it changes the status to close, because that is closed. So we'll first answer that question from Vijayta regarding gold's breakout. So we will get this one first in front of us. Let's maximize this chart, maximize, and then make it gold. Yeah. This is the chart of gold in front of you. And when we gave the call on 30th January, before that, and it is written, if you can see, it was written daily breakout. So what does it mean? It means that when we saw the market at the close of the 29th bar, 29th January, which was the daily, 29th January, this is a daily chart. 29th January bar closes on 30th of January, the Melbourne time, 10:59:59. So it closes at this point. And at that point, what we saw for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. For the 11 days, price did not close. The price did not close above this close, which was, if you can see, 2039.4. So if I go here and configure that 2039.4, so that was the highest close for Showman. Oh, my mistake. 2029, it seems. Close is 2029.7. 2029.7. All right. So that was the close of the last. That was the close of the last so many days. If you can 6 plus 9 plus 10 days, it did not close. That's why we have written daily highest close. Daily highest close 2029. But on 30th morning, what we saw this close. This close was above this 2029.7. This is a very interesting fact. Anyone can observe this interesting fact, that whenever market is stuck, when the open and close for more than 3 days, like this fellow, when the open and close of more than 3 bars or 3 candles, so I can make it candles to make it easier for, bars to make it to take lesser space. Candles take a lot of space. That's why we can we see the candles on the bars itself. So let's move this delete item. All right. So we saw this 29th bar, which closed above closed above the highest close. Till that day, the highest close was on 19th January. After 10 days, this bar on 29th of January closed above the 19th January. So in this case, it is a breakout. It is a breakout because the trend is up. If you can see the channel, if you can see the channel here, the channel which is a standard deviation channel, which can be a standard error channel also, which can be a standard error channel. So that standard deviation, let me first make this one, pin this, otherwise it will go away. So pin this and paste it here. All right. And then if you see the chart, if you see the trend is up, definitely trend is up. So when the trend is up, we generally see a we look for a possibility of going long instead of possibility of going short. Of course, you can go short here when you see a crack and snapback on the yearly resistance at 2073. So it's a crack and snapback, rule of 4, close below, low taken out, all those things happen. Same thing happened, consolidation here at the base of the channel, and it is a breakout. So that is what actually we saw this and initiated a trade above the breakout, and then 2 days, 3 days we made money. And it was in gold, gold particularly. This is a very good question initiated by Girija. Thank you for that, Girija. Gold, you need to remove this decimal place. In gold is very interesting. Otherwise, in foreign exchange, we go up to 4 decimal place. Like if we have to say what is the exchange rate for, what is the exchange rate for Aussie dollar, we say 65.11. Yeah. So 1 US dollar is 65.11 cents US. So that's what we go up to 4 decimal place. We remove the decimal and go up to 4 places of decimal. Similarly, euro, we say 1 euro is equal to 1 US dollar and 787 cents. 0.787 cents. But for gold, that is why gold is a tricky one. But if you know it, it's not tricky anymore. For gold, particularly that day, Sunil was asking me this question. Isn't it, Sunil? I think his mic is in mute. Anyway, so for gold, we need to remove this decimal place. So if you go to our modules and units on commodity trading, in which I think last class, Ben, if you remember, we were discussing in the module and unit, we were discussing about the conversion units, isn't it? Troy ounce. You asked me a question, who is Troy? Yeah. Ben, remember?
I did.
Yeah. Did you find out who is Troy?
Yeah. No, I still haven't found Troy yet. He's still missing.
Anyway, so the bottom line is we need to remove this. We need to remove this decimal, and we say gold is 20,380. So 20,380. If it goes to 20,381, or you can say 38.0 to 38.1, and if you have taken 0.1 in MT4 MetaTrader 4 0.1, then it will be getting $10. So $10. If you've taken 1, it will be $100. So if you've taken one lot, if you've taken in MetaTrader, yeah, one lot here, 2030 20. What is the close here? Let's see the close, or let's see our call. So our call was at 2029.7. So 2029.7. So if I enter at 2029.7 somewhere here, and then market goes in a couple of days, 2029.7 we enter, yeah, that's it, got it. And the market went up to, if you see, up to 2063. So what you have to do, so you have to do 20636. So I'm doing it in calculator. 20, you can do in your calculator also. 20636 minus 20297. 20297. So that is 339 points, not 33.9. That is 339 points. 339 points. So if you invested $1, you will get in this movement from 29.7 to 63.6, you get 339. If you have taken 10 as lot size in MetaTrader, you will get 3,390. And if you have get 25, so multiply this by 25. If you have a $250,000 account, you can go up to 25. Then it will be a profit of $8,475. $8,475 in a $250,000 account from our one call. So apart from that, this was the breakout to answer your question and to answer your lot size. Sunil, I have punched all your questions. I could not answer who is Troy in Troy ounce. That is for Ben. That is for Ben to answer. But did I answer your question, Vijeta? Did you understand the breakout?
Yes, I did. Thank you.
Any other further question on gold before I go to your next question?
Yes.
Yes, sir.
How to draw standard deviation channel?
Very good. Excellent. Someone else asking question. Who was that? Asking question, please.
No, that's fine. That's fine. That was the one. No worries. Keep carry on.
Okay, Sunil. So that was Sunil. So how to draw standard deviation channel? Very good question. Excellent question. Excellent question. I really appreciate this type of questions. So let's delete all the. Don't save this. If you delete, if you are deleting for demonstration purpose, now that I'm doing only for demonstration purpose. Never ever go file, quit, and save it. If you save it, you are done. All the lines drawn or deleted is gone. So please don't do it. Yeah, dangerous. It is dangerous to do it. But for demonstration purpose, I'll do it. And at the end of my session, I'll close it without saving. So my lines will be there. Don't worry. So the easiest answer to that question, Sunil and Vijeta, is right click on the chart, go to settings price, right click and settings price, and then do here add indicator and type in EMA, exponential moving average, and then make it 200 and make it 200. I'm answering your question only, but with the context. Again I repeat, I know Ben and Marty will be saying Partha has repeated this word context in his lifetime millions times. Yeah, I do, because context is everything. So before answering your standard deviation question, I must clear it out, the context, where from we need to draw, and what is the easiest way to remember what we are doing. So the easiest way to remember where from we need to draw is, as an easiest way is, if you generally say Paul Tudor Jones, if you are following Paul Tudor Jones, the multi-billion-dollar hedge fund managers from Forex, if you do the color zones here and add color, price greater than 200 is green, price less than 200 is red. Yeah, if you can do that color, it will look like this. So Paul says if it is above 200, it is bullish. If it is below 200, it is bearish. That's what Paul says. Okay. So if Paul, like a $1 billion hedge fund, is going long, we'll also go long here, isn't it? So, but how do I answer Vijeta's question? How to draw standard deviation line? First, you have to go, if it is not saved here, this is sigma. If it is not, sigma means standard deviation, root means square deviation. If it is not saved here by you, none other than you, what you have to do? You have to go to objects and then go to channels, objects, channels, and standard deviation channel, and make it this one star. If you make this one star, it will appear forever if you are going to file, quit, and save here. Okay. So objects, channel, and standard deviation channel. So I have two. The standard deviation channel we use generally for the uptrend, and standard error channel, which is nothing but the standard deviation channel divided by the number of observation, that is n. If n is 45, then it will be divided by 45, and so on. Every data will be divided by 45. Don't worry on the mathematics. So what we have done, we'll draw the standard deviation channel, click here, and from the point before it came above the 200, from below, go to the lowest swing low, go into the lowest swing low of this crossover, go to the lowest swing low, and draw it to this point, to this last point. Okay, again I repeat, go to the last swing low, go to the last swing low, go to the last swing low of the last crossover of price of 200, because it is going long, and draw it from there, draw it from this line to the to this, and leave it. And that way, and we prefer our, we have our proprietary numbers. One starts is 1, we can make it 1.27 to 1.618 or blah blah blah. But if it is 1, we need to see a couple of points which has touched. This fellow has touched, this fellow was very near, this fellow has touched, this fellow has near, and then this fellow has touched, this fellow had definitely touched, this fellow had did a crack and snap back, this fellow had done a crack and snap back. So these crosses are for going short, and these longs, these trick marks are for going long, or at least thinking to go long. This is the way we draw consistently the standard deviation channel. Did I answer your question, Vijeta and Sunil?
Thank you.
Yes. Yeah, thank you.
All right. Any other question on standard deviation or standard error or on gold before I go to her next question? Okay, then I'll go to her next question. And the next question she asked, how to identify the possible next week short-term trend for the following currency pairs. Yeah, currencies are brilliant. $6.7 trillion a day transaction, and 1 trillion is $1,000. Okay, sorry, 1,000 billion, and 1 billion is 1,000 million. Yeah, so that's humongous. So because he has clapped so many, what I'll do, I'll not take that much time, otherwise it will take a little bit of more time for me because I'm slow. And then what I'll do, I'll do this one because the mirror image will be this one, or I'll this one because this is Girija's favorite, yen. Which will be mirror image of Euro USD, and Euro USD very high correlated to Aussie. So I'll do these three and then try to relate Euro Aussie, and I leave it to all of you to do Euro CAD, especially Ben, because he has specialized in Euro CAD in recent times. Okay, so first let's go to Euro USD. Let's do that first. Okay, someone is doing something. Abraham, admit. Okay, Abraham, how are you? Okay, now I'll go to Euro to answer her question. Euro USD mini. We love minis. Yep. So Euro USD, as you can see, is doing either Marty is a master of this art of impulsive and corrective. I'm not at all good, but I can do this my way, or Paul's way. Above 200 is impulsive from here, and then we have impulsive from 200, and then to the 200, because corrective, impulsive, corrective, impulsive, corrective, and then we have corrective. I have corrective. Yep. So when we are having Euro was not like this. Euro is supposed to be a very stable currency because it is a somewhat reserve currency for 19 countries. But nowadays Euro is also started behaving like sterling. It is having deep fakes, like deep retracements, like this one. Who knows? It can start a new wave down. Marty will touch on that probably. So in that case, what we are expecting here is, to answer your question, Vijeta, is we saw a big mother bar. We are calling this big bars or mother bars. And why? Because we want to get a support from the low of the mother bar or from the midpoint of the mother bar. The midpoint of the mother bar, which is somewhat like this here. All right. I love this number 7850. All right. So what happened to on the mother bar when the retracement was coming at 61 or 78.6? What we saw a consolidation of and along with the play of the with the beast, which is 200 moving average. It played for 6 days and then went up with another mother bar. So in that case, we'll draw another swing on another support point on this mother bar. Mother bar is nothing but a big bar at a critical point, like this one. We call it all buyers in or all buyers out. Yeah, something like that. This is all buyers out. This is all sellers in, as you know already. Yeah, at NP Financials, you are already trained here for that. Okay. So in that case, what to answer her question now, after this beast, after the euro US has placed for 7 days here, and now it is playing. Now it is playing for with the beast again. Beast means in 200 moving average. It is doing for how many days, for calculation purpose, from here to here, 9 days. 9 days it is playing with the beast. But for the last day, that is the last day, which was Friday, 2nd of February, what it did, it's probably this bar is probably saying to us, unless and until a crack and snapback happened tomorrow, unless and until the Kraken snapback is happening tomorrow, to answer your question, Vijeta, we'll have a see this got stuck on the motherboard midpoint, and also we have a support zone. So unless and until it is doing a Kraken snapback on the 200 moving average from this support zone, of the last two, we will be having possible short bias. We'll be possible having a short bias for this fellow. That is the short term, unless and until it is doing a crack and snapback. If it is doing a crack and snapback, obviously it will again go here, and then it again start playing within the channel as it is playing. Again, it is playing. It is very interesting. This channel is a very tight channel. If I have to show you a standard error channel, this is a standard error channel, not a standard deviation channel, and it is a very tight channel, as you can see. It is so if it is doing a crack and snapback, it will probably go here and then do this, or if not, then possibly it will straight go there. That is our look, our viewpoint. Will not be definitely shelling this point, never, because we don't sell a support unless and until our rule of 4 is being satisfied. We don't sell a support. We always sell resistance. Like here we always sell resistance. We buy support. Like here we buy support, we sell resistance. Okay, for that, with this support and resistance lines are to be drawn. First needs to be drawn. So that is our viewpoint. If I are not seeing a crack and snapback, then we possibly go down here, and the reverse is true for the yen. Also. Hold on for a minute. I'll take this advantage of the 200 moving average to show you the game which the other currency pair is playing with the 200 moving average. That is none other than our own currency, which is Aussie dollar. Aussie dollar played with 200 moving average from this 23rd of November to 20th November to 23rd November once, and then second from this date, 5th of December to 13th of December. Again, the same drawing. Same drawing for you, Vijeta. Same thing. Of course, our strategy will tell you. When exactly to buy, when exactly to sell. But I'm just explaining now now what is happening with this 200 moving average for the Aussie and the euro, because this is a beast. So in Aussie is a terrible here. My goodness, for so many days it is struggling with this fellow, but now we are seeing all sellers in bar after 15 days. To answer your question, you have also asked for Aussie dollar. For Aussie dollar probably we'll have a negative bias for the next week. Next week we'll, and then to inverse euro. So far so good, Vijeta. Are you understanding, or am I going fast?
No, good understanding it.
Good. So if you have understood both of them, then we'll go to the third one, which is USD JPY, which will be the reverse of this fellow, which is the euro. How do we know this? We can know this if we go to a chart setting. If we go to a chart setting and then delete this, and then for the time being you remove this, and we have a price which is euro dollar, which is yen in front of you, and then we can delete this for the time being. I can redraw again. So this is the yen in front of you. Actually USD, because the chart represents the base currency. In the base is USD, term is JPY. The job of term currency is to calculate the profit and loss in Japanese yen. but for the job of base currency is to draw. So this is USD going up against yen, but generally we say yen. Unbelievable. All right. So this is yen. So just reverse this to just compare this. Go to more. Go to more. Why can't I? This is so big. My goodness. Just hold on. Go to more. I'll go to a big screen and make it happen. Or should I really and then go this way and then right click? Oh, so much of clicks. Right click. I saw more, isn't it? It's below. Somehow it is not coming. If you can see more. Okay, hold on. So what I'll do, I'll go here and then in the big screen, I'll go to more and then go to compare to instrument. And then in that instrument, I'll write Euro USD. So I'm comparing yen with Euro. So this is in front of you now. This is euro, and this is euro is in green. This is euro in green, and then yen in blue. Delete. Otherwise, you'll be confused. Yeah, which line is what? So if you go to a monthly chart, or both, you will see the correlation, which is inverse. What does it mean? It means that when the dollar goes up against the yen in blue color, as you can see in blue color, it is going up. When dollar is going up against the yen, these markings are so many. Okay. So this is a beginner's course, which we generally always do. So when the dollar is going up against the yen, and then euro is same period, euro is falling down. Same thing. When euro is falling down, then dollar yen, we generally say yen is going up, or USD is going up against yen. Yeah. So this is the relationship between inverse relationship between yen and euro. For the same reason, we don't trade USD CHF, because Swiss franc is exactly opposite to euro. So in that case, what we'll see, we'll delete this one now for the euro, and then we quickly see what the yen is doing. When the yen is doing for the time being, now we'll go to a bar chart. And then to answer Vijayata's question, so possibly yen is doing very strong. 151 can be the resistance. 151 can be the resistance. And if you have drawn some channels, or now you know how to draw the channel, you can go to the lowest point after it has crossed, which is this one, and draw the channel. And if it is not touching the bottom, it has touched only once. So what you need to do, you need to reduce this. You need to reduce this to maybe 0.618. And then if it is not touching, reduce it to 0.5. I love it, 0.5. Yeah. So in that case, what you saw, but probably our friend Girija has seen, she must have been long here. It is the all sellers out at a support. So we'll go for the next week to answer your question. If you have missed this opportunity, and then possibly there is no way you can buy here because the resistance is here, or we can wait for a crack and snapback on the resistance line. This is the monthly chart, of course. We go to the daily and draw the standard deviation channel. By mistake, I did that on a monthly. You can also do in a monthly, don't worry. Yeah, so this is a crack and snapback from the daily perspective. The perspective gets changes when you changes the units or monthly class, like master. This one here, the 2 days, weekly, and so on and so forth. Now we are in a daily chart. So the outlook for USD JPY for the coming week is long. It's long because it has done a crack and snapback. So with this, probably I'll stop and then possibly hand it over to Marty. But before going, did I answer your question on the on at least 3 currency pairs? And I will say, if this is an interesting one. Euro Aussie is a triangulated currency pairs between Euro USD and Aussie USD. So in that case, if the momentum of fall of Aussie is more than the momentum of going down Euro USD, then Euro AUD will go up. So this is my last statement. So if I go to Euro AUD to just show you for our viewpoint on for the next coming week, is Euro AUD definitely is going up, as you can see. Definitely going up. So if the but we saw for the euro at 200, it has a all sellers in. That's why we have a negative bias, and Aussie also had a negative bias. So comparing those two negative biases, possibly will be long. Here is a crack and snapback in front of you on the 200 moving average. Beautiful opportunity to go long. So we'll be having kind of bias because it is 45%, so it can go up to 100% there. We'll have a long bias for euro Aussie. With that, I request you to do two more yourself. I think one more. EuroCAD or Ben can help us on that. But before I go hand it over to Marty, do you have any question, anyone, on any currency pairs which I touched? I touched gold as a commodity. I touched correlation a little bit. We talked about yen and euro. We talked about euro Aussie, and we talked about Aussie dollar. So we have covered so many instruments in last 40 minutes or 36 minutes. Do you have any questions?
Yes, good, thanks.
Fantastic, brilliant. At least I got one compliment. Thank you. Just my mic is on mute, so that's all right. All right. So with this, I request Marty to take us for next 17 minutes till 4 o'clock. Then Kerry can take us through. Thank you, Marty.
Hello, thank you, Partha. Hello, everyone. How are we today?
Good.
Very
Hello,
good.
Marty.
I have stopped
Hello, Andy.
presenting, so you can start presenting.
Okay.
Yeah, fine.
Let me just figure out which screen I want to use. I will stick with I've got lots of choices here. It will be not that one. Entire screen, this screen here, and share. Okay.
Yeah, we can see your screen.
You can see my screen. Okay. So last week we did a bit of a joint session together where we went through a couple of these fellows up the top, and we were coming up with trade ideas for the next. We're on the weekly time frame. We wanted to monitor these trades until the next monthly masterclass. Okay, so we did do the ASX on a weekly time frame. I have got rid of that daily time frame we had as well, just to clear any confusion, just so we can just stick to the one time frame. Okay, so on this guy here, was at this point of time, we had, I believe, Rija telling us that once we have broken above a Bollinger Band and we are close to a resistance, like this pivot point here, that ideally she would be like to be going short. Okay, so as this point in time when we have gone short, I'm asking a question to anybody out there: how could we have monitored this trade once we have gone short? Would we have just allowed it to get stopped out, or would we have reversed the trade anywhere if we've seen a different signal to go long?
That hammer high was taken out. I can see that one. So we should
Right
be
here.
yeah.
Very good. So that's going back to Partha's bar by bar analysis, where once we've seen this fellow here and the high was taken out, we've had his rule of 4 and we could have closed the position there. Okay, so next, coming down the list, we looked at the Australian dollar. So it was at this point in time, this fellow here, where we said if we go below this red candle here, we would short this fellow.
Excuse me, Marty, can you zoom the chart a little bit, please? Because it's very small, very hard to see.
Okay.
Oh, that's better. That's better. Good.
Okay. All right. So at this point in time, we looked at this chart and we were saying if we break below this guy here, this red one, we would take a short. So our reasons for taking the short, we have closed above and then below the Bollinger Band. We had also closed below this yearly pivot. And we've also done the rule of 4 to go below this candlestick here. So this was our short entry, 0.6630, and that was our stop loss here at 0.6881. Okay, so from this point in time onwards, has anyone got any reason to close this order out, or is there something someone would like to do differently here? Anything at all?
Tremendous trade we got it here, isn't it?
We did, I believe. Danuka, I think, came up with this one.
Danuka, congratulations.
Okay, so Danuka's happy with this trade.
Yeah, Marty, I personally would just probably be on watch to see if there's a Fibonacci on that. It's sitting right at the 618, I think. And also it's touched 65 round number. So I would just watch it to see if it does have some sort of reversal or whether it continues on.
Yeah, good point.
Okay, so we're watching this one very closely, but we're still happy to ride the short until we see some kind of reversal at a Fibonacci retracement level. So I would assume from here, is this correct, Ben?
Yeah. Yep.
To here.
One.
Okay, so yes, look at that. We're right on that 61.8. And as Ben said, the whole number is right there as well. Okay, so once we're in a trade and it gives us a reason to close it out, have no regrets. It's probably better just to close it out as soon as you see a signal and move on to the next trade.
Can you take the daily chart as well? Then
The
just
daily
see
chart.
as it turned around. I think it went up last week, end of last week.
Okay, so for this exercise, we'd like to stick to the weekly, but let's have a look at the daily.
Oh, it's gone down again. Okay.
Okay,
All good, thanks.
all good. No problem. So back to the weekly. All right, we'll just do a handful more. Is this still big enough for us all to see?
Yeah.
Iron must be having some comment on Anthony Albanese's comment party and why their politicians are interfering on treasury. Tyrone, any comment? He loves Anthony Albanese.
I'm not going to talk about Elbow. He gets himself in enough trouble as it is without me helping.
Now the politicians have started talking economics, so it's interesting time ahead for Aussie dollar. That much I can say.
Well, I think last time we spoke, they were the last two trades that we put on. We ran out of time. We didn't like oil. We were looking at this stuff here, and it was too close to both the 200 moving average and this pivot point. So we just left this one alone. And I think we also touched on the dollar index here. So it was this candle here, and we didn't come up with a trade on this one as we run out of time. So I'm just wondering if everyone's all happy and if we want to go through a couple more charts together and look at what we can come up with next meeting. Okay, very
Yes,
good.
Sunil.
Yes, Garija?
Yes. Yes, Marty.
Do you want to look at more charts? Look at a few more
Yes,
charts. Okay,
please. Thank you.
so here I'm looking at Ethereum. Has anyone got something? Would anyone trade this fellow here? Can we see any divergence, relative divergence, any support and resistances, any candlesticks or anything like that? No, so one thing I'm looking at as we've gone from this end of the Bollinger Band all the way to the top of the Bollinger Band. We've also got this here, this evening star kind of set up here. Okay, not only that, we have this cannot break one candle here. So if we've gone up, we've not taken out the high of this fellow here. Okay, so I would likely go short on this guy. Has anyone got differing opinions? Is anyone seeing anything else at all?
I personally would, Marty, would like to see that mother bar taken out before I went short, I think.
So this
the
mother
bottom
bar
of that.
here.
Yeah, that's right. Yeah, that's just me. But
Okay.
yeah.
That's good. Would we consider this bar an all buyers out? No.
It's sort of in the middle of nowhere, isn't it?
We can see a crack and snap. As per my 2 cents, we can see a crack and snap back on the Bollinger, that big green bar, and after the red bar.
And this guy is bigger than the last 20 odd bars. So this gives us reason to think that this guy can be a good candidate for an all buyers out as well. Okay. All right, so we can go short once we take out the low and close below this big mother bar here. All right. So we went over just before the euro and the dollar index with Partha. Okay, so I don't want to confuse you guys too much. With an Elliott wave perspective, it might be a little bit tricky for a little while. So we've had all this come down as just a correction. Okay. This upward we're seeing at the moment is another correction. So we're in a correction of a correction. So it's likely it's an A, a B, and a C upwards. Okay, so we'll come back to our pro real time. Back to our dollar index. See, so this was our large corrective A wave that had finished. Okay. So what I will do is put a large A to the downside. Okay, so got the red border around it. Now this guy, we have our next correction to the upside. So that's a smaller correction. It'll be an A. Because it's on the upside, we have a more positive color like blue. This is B. So it's likely this is a C wave to come above this A here eventually.
Look at the bounce from the 200 moving average twice in your A and B, isn't it?
Absolutely. And look how it likes the Bollinger Band as well, from one
Track and
side
snap back.
to
Both
the
cases,
other,
track and snap back.
to the other, to the other again. So that's just my outlook on this dollar index, as well as remember this being two yearly pivot points joining together. So this can be a strong support resistance line here. Okay, so remember that when you're looking at the euro, the pound, and the USD against the yen and the dollar index. One I think we should look at before I go is the sterling. So, okay, we're on the weekly chart. So we have this guy here, this red bar on this 200 moving average. Okay. Is anyone willing to sell this guy here? Anyone at all?
I bust before on a weekly chart. That's my 2 cents. On the hanging man, the man is dead as per Steiner. So that hanging man low is taken out. Rule of 4 is satisfied. 5, 1, 2, 3, 4, 5. The green hanging man. Yeah, no, go 3 left to 2 left. Yeah, that's the one.
That's the one.
Inverted hammer or hanging man. Yeah, the next one is hanging.
Absolutely. As well as that, this looks impulsive down here. Impulsive, corrective. We have a mix of color bars here. So it is likely we will get another impulsive down as well as that here. Okay, but I will write that down. We could have gone short on that guy there. Bang. Look at that. What a beautiful entry. You're already in a lot of profit points there. Okay. So, Kerry, would you like to start your
just on one 1 minute before we invite Kerry? Yeah, I think you touched on crude oil, isn't it?
I did. I touched on
And
crude
if you remember, we put a trade idea in our client arena to go short at 7,568 on 30th of January. 30th of January, we put a okay. Quickly share my screen for a moment, if you don't mind.
Yep, that's fine.
Entire screen, and this one share screen. Yeah, so this was the one I'm talking about. I hope everyone can see my screen.
Yes, sir.
Yeah, so I was talking about this one here. What Marty actually was talking about is the crude oil. We did give a trade idea on 30th of January, crude oil to go short at 7,568. And now crude oil is at 7,000, how much?
7,240.
7,240. So that's a running trade, which is running at 328 points in 3 days. So that's not bad, I think. and daily crack and snapback on the 200. So this is a running profit trade. This is a running profit trade, and so on and so forth. Yeah, thank you very much, Marty. Really appreciate. And if no one is having any question on Marty, then possibly we invite Kerry to take us through. Thank you, Kerry. Thank you, Marty.